Time now for the next big trade where we uncover Wall Street's boldest predictions and bring you the analysts behind the call. Well, in this case, you can call it a strategic play on the Strategic Petroleum Reserve. And that, as you know, is America's hidden stash of crude only to be tapped in theory in times of emergency. Is this an emergency now? They're talking about tapping it. Well, maybe $100 on a barrel. That's an emergency, or maybe not. Barclays says Obama will open the spigot sooner or later. And the person behind that call, it's Helima Croft. She's here right now. She's the firm's director of geopolitical strategy, and she has a playbook to get you prepared. Still with us, of course, Tom McClellan, editor of the family-run McClellan Report. All right, guys, Helima, he's going to go and tap the oil. Why does he do it? What's the emergency?
We think he's willing to do it for price reasons. Now, Republicans, in theory, say you only tap the Strategic Petroleum Reserve if there's a disruption to a U.S. refinery. But we think the Obama administration and Democrats in general are more willing to tap the SPR to get prices down at the pump. So we think Obama, going to an election year with the Iranians continuing to saber rattle, is likely to tap the SPR, to be seen as doing something.
So if it's a political move, when does the president get the biggest bang for the buck? What's the timing?
Got to go late, because if you look at the last time he released last summer, we saw prices come down about $8 over 2 days, but then they rebounded in 2 weeks. So we went from 114, and then 2 weeks later they settled around 118 on Brent. So you have to do it late if you want to get the political dividend from
like
it.
Late being about 3 days before the election late.
Well, I would say a couple of weeks before the election. That'd be the ideal timing. And if you look at the statement by the French energy minister today, there's a reason why he came out and talked about stockpiles. Sarkozy's an election in 4 weeks. I think the French timing was due by the French election cycle. So I think Obama's going to be looking at when do you get the bang for the buck on the SPR.
And you would advise him anyway. It's about a 2-week window. So an investor who's looking at oil might say, OK, that's the time. Because, by the way, these prices don't hold. I mean, that's an important thing for viewers to know. I mean, at the end of the day, it's a global supply market.
Absolutely.
Whatever we do here in the U.S. with the SPR, that has a very temporary effect.
Absolutely. And so the question is, if this is driven by saber rattling by the Iranians, this is not going to deal with it. It's not going to give the medicine to deal with the problem. The problem right now in terms of the oil market is the issue of Iran, the concerns about the closure of the Straits of Hormuz, and I don't see that situation being resolved quickly over the course of the year.
So it's purely a political nod. It has no bearing on reality.
But you can make money on it.
Well,
yeah, if you're quick, right? Because as you pointed out, the decline in oil brought on by the release of oil lasts for what, 2 weeks?
Well, it lasted about 2 weeks last time. And again, what was interesting about the last release was he sort of broke up the playbook. Because again, Libya was a disruption, but it wasn't a disruption to U.S. refineries. So I think we're going to see another iteration of this policy. It will be done for price reasons. And congressional Democrats are already calling for a release for price reasons.
Yeah, they are. Barney Frank was on the program just a couple weeks ago, saying we've got to tap the SPR. Tom, weigh in on this. What do you think? I mean, do you agree with Helima, what she's saying here?
I agree that tapping the SPR could roll the price down. And in general, historically, poll numbers for the president in the office have tracked with what oil prices have done. It's been weird, though, when Obama's been in president, that's flipped around. It's somehow inverted now.
Well, maybe that gets to that demand issue we were talking about, right? Like if higher oil prices justify that there's bigger demand.
That was your point earlier in the show,
and the consumer can kind of take it and is willing to pay more. Maybe that's good for the economy. I mean, Helima, we were talking about this just earlier. I mean, do you think that all of this is Middle East tension? How much of it is real demand? I mean, how do you break that down?
I mean, we think the supply and demand fundamentals really justify 115. And so if you look beyond...
And that's on
Brent.
WTI or Brent?
That's on Brent.
So 115 Brent equates to what, about $100 U.S.?
Yes. So if you think about it, you know, we really do see a premium right now on geopolitics, but that doesn't get away from the fact that we're in a tight supply and demand situation. We think there's only about 1.7 million barrels of spare capacity out there right now.
Out of a total demand on any given day of about 89 million.
Yes.
In other words, it's about 2%.
98% capacity utilization in the oil market right now.
What do you think is going to happen in Iran?
You know, I do think we get through this year without a military strike. I mean, I was just in Israel, and I just had this sense there that right now they're not looking to bomb the Iranian facilities. There's a sense that you really want to know what the blowback's going to be in terms of missiles into Tel Aviv, in terms of how Hezbollah will behave. You know, I think they still want the Americans to do it with them because you want to really set back the Iranian nuclear program. They'll go it alone if necessary, but I don't think they'll do it while talks are going on with the Iranians. So I think we can get through this year without a strike. But the problem is, if the Iranians continue to enrich at 20%, if they put more centrifuges in the Fordo site in the mountain, the Israelis are going to keep this issue alive.
Helima Croft, the head of geopolitical strategy at Barclays Capital, thanks for being here.
Thank you for having me.